is closed in Detroit.
All right, thank you for letting us know about that, Allie. Well, today we're going to find out if borrowing money will become a little cheaper. The Federal Reserve is considering a decision on interest rates to lower the key interest rate. Now, for the typical American, this would impact how much interest you pay on car loans, credit cards, and even how much interest your savings account generates.
Now, all of this comes at a time of growing economic uncertainty for millions of Americans. In fact, we're learning credit scores are falling at their fastest pace since the Great Recession back in 2008 as more people fall behind on payments. The national average FICO score dropped 2 points this year, and that's the most since 2009.
Now, Americans say that a lot of them are saying that they're facing issues all over. High student loan debt, low entry-level hiring, the cost of food going up, the list goes on.
Well, 7 News Detroit reporter Brittany Toulis joins us live from downtown Detroit. She's hearing from Metro Detroiters about how they're dealing with their current economic struggles.
And she also spoke with a local economist about what a rate drop would mean for your finances. Brittany?
Alicia Keenan, the Fed is expected to slightly lower interest rates later today. The OU professor I talked with says that may make paying things like your credit card bill a little easier and in turn positively impact that credit score. But he says the Fed is walking a fine line with this decision because lowering interest rates risks increasing inflation and raising prices of everyday items.
So you can see where there's kind of this conflict that the Fed needs to manage. Where on the one hand, they want, lower interest rates mean a better economy. I think that there's a real concern that people are going to start to see some prices going up very dramatically in the grocery store and certain other places if inflation starts to go up again.
Today, the Federal Reserve's Board of Governors is expected to cut interest rates for the first time this year, but it's not a big jump. The cut projected about 1/4 percentage point, leaving the target interest rate sitting at the 4 to 4.25% range. The move hopes to stimulate hiring, which saw a slowdown in the most recent jobs report. The Fed has held the current interest rate for the last 9 months to see how the president's sweeping tariffs impact the economy. August Consumer Price Index shows prices are up. You paid nearly 3% more for goods this August than you did in August 2024. It's about the same price jump from this July to this August. Right now, what we're seeing, says OU's Professor Greiner, is stagflation. And people we talked with are feeling the pressures of both high prices and high interest on things like student loans.
That's where you get to the situation that they talk about as being stagflation, where you have both an economy that's not doing well and you have high inflation, which typically those two things kind of cancel each other out.
Being able to pursue 13 years of advanced education, I came from a working class family with a single mom and basically funded most of my own education through scholarships or through loans. It can be quite stifling. They can be the size of a reasonable house payment.
To have a good job, and that is helpful, but I feel like I'm trying to save, and if anything else, I'm losing ground a little bit. High cost of food prices, for example, is something that is, it's something you see every week.
This is also not expected to be a unanimous decision between the Board of Governors. Some are expected to push for more aggressive interest rate cuts that's in line with the administration request, and others are expected to push to hold those interest rates where they are, Alicia and Keenan. So that's something we'll also be keeping an eye on. But for now, live from downtown Detroit, I'm Brittany Toulis for 7 News Detroit this morning.
Yes, we will be keeping a close eye on it. Brittany, thank you for your live reporting this morning.